Record to the clock. Got it. Okay. Now, what were you trading?
I was trying to trade in. It didn't really happen for real.
EN. And were you buying or selling?
I was trying to buy up to sell,
Buy up to sell. Uh-huh.
but the buy up only happened for a short period of time.
Okay, so I don't have this one marked up. So let's do that first. So on the daily, okay, Brandon. Hi, Yvette. So on the daily, we have a zone here, right? Key level
Mhm.
there. That's currently where price is. So if I look at the closest thing below, I would just say here, and then above, I would say it's probably just going to be that up there, but maybe this right here. Okay, and then on the 4-hour, this little thing in my way. So on the 4-hour, we're talking here. And let's go below. It's probably going to be the same as the daily, so I won't need to mark that up. Okay. So now let's go to the 1-hour. And where did you buy from?
I got in at market open on Sunday, so let me see. I think it was 1 point.
Sunday. You were doing the Isha strategy?
Right, right.
Okay. So we have Sunday, the 7th there, and then let me just mark the Monday midnight. Monday midnight. Right here. Okay. So you have market open here and then market open here.
I think
So
price for me was 7536.
and let me put your price here. 7536. 7536. Okay, so you got in there. Okay.
Mm-hmm.
So okay, let's first go back to the daily and see that price, as we know, is bearish, right? You know,
Right.
the price is overall bearish. So what I'm gonna do is just mark up here. Oh, let me go to the 4-hour. Find some. Okay. So just marked up my swing highs here, and then prices below. So now let's go back to the hour. And let's make this a little bigger. All right. So price, Monday open price was above, right?
Mm-hmm.
So you're looking for the imbalance. Let me move these. This is the Isha strategy. So so price was above. So I don't see any imbalance
Yeah,
on
it
the
just
1
pretty much
hour.
It just pretty much pushed up from the time I
But
got in.
if you look at, okay, so price was at a key level, right?
Mm-hmm.
And then it broke the key level right here. So you could have fibbed, at least fibbed this up, and this came back to the 618, and you could have taken it to the negative 27.
Mm-hmm.
That would have been the probably the best way to do it. Since we know that price is bearish, and this was on you was basing this off of what, a weekly something?
Yes. Mm-hmm.
Oh, because the candle.
Right.
Okay, so last week there was barely any candle, so, and it did push. Did it go down first or did it come up first? So it pushed up and then pushed back down, or pushed down and then pushed back up.
And then pushed up here.
Yeah. So let's go down to the, do you look at the charts on the 15, or when do you watch your chart?
I like the 4 hour and the 30 minute.
Okay.
They seem to mirror each other well to me.
So once this occurred from the key level, so you have to remember that. So there's a violated order block right here, right?
Mm-hmm.
So this would have been the retest of this push up. I got it now. It just came to me. So you were
Mm-hmm.
expecting to push back to what, 50% 618 or something?
Yes.
618. Gotcha. So let me fib this. This here. And let me just mark up the golden zone. Um, 50% 618. Okay. Let me just take this off. All right. So if we go back down to 30-minute, so price came back to a minor key level and then traded back down to, and broke below this zone. So I think that price would need to, so if I go to the 2 hour, right? Price would need to break above, so, well, now that it's creating some key levels right here, right?
Mm-hmm.
Price would, well, this is the last swing based on looking at market structure, right? This was the last swing because this broke below here. So price would have to break here.
Right. So I bought up. I think I got about 100 pips. And then when price just started consolidating back and forth,
Mm-hmm.
I took partials on the trade and I was holding, just expecting it or waiting to see if it was still going to move to the upside, because to me it kept rejecting for the sale too.
Yeah.
So I just I waited for a while and then I closed out.
You got out. Okay.
Mm-hmm.
So the fact that you're at a key level, let's see if we can find a higher time frame order block. Let me move this out because that already played out. So this order block has already been tapped into. So let's go to the weekly. Let's go to the monthly. Yeah, so this is probably gonna keep dropping. That's the way it's
Yeah. Mm-hmm.
So I would say, so at the, on the, based on the daily, based today we got a bullish order block. So this is either the way that these candles are, this might pull back a little and then push up because we got a daily order block. So this may push up and then push up to your golden zone, which is a key level, as you can see. If I were trading this, I would like to see it come back to this level and then push up. And then that would be, what, about 304 pips? But that's what I would like to see. But we have a daily order block here, and then we have a bearish order block and then a bullish order block. So one of them has to get run through. So I would definitely, at least if it pulls back and starts to show you break of structure somewhere up in here, if you at least take it to, from here to here is 115 pips. And then just watch it on your 30-minute to see what it does. So this could pull back, or this could really just keep going straight up to here.
And it just started pushing up today, so I'm thinking it may continue to the upside.
But because this is so if you mark up your swings, which I was supposed to be showing y'all, along with the lines, like how to transition from the lines to just trading. So you mark up your last swing. So you mark up the high, and then you mark up the low. Because your swings are level. If you look, it'll be some form of support resistance, right? Price came here, rejected, came back up, rejected. So that's some level of resistance. Price came here, pushed up, here, pushed up, here, pushed up, and then pushed up. So this is some level of support. So you can trade from zone to the same way you would do like drawing the lines. You just trade from zone to zone. So even before this had happened, this would have been this right here would have been this would have been your high, this would have been your low. Once you got in this zone and you had this break, right?
And
you could have fibbed at least from here to here to see where price was pulling back to. One of the discount areas, 50%, 618, 78, and it came to into your 50%, 618. It gave a bullish order block, and then it broke. It started rejecting up in this area. So once it gave that bearish order block, that could have been your entry to sell. Although I like for price to be honest with you, I would like for price to be in the zone. But like I said, when it starts rejecting, you're getting a level of resistance here. It is better in the zone. Matter of fact, this really should have been the entry right here from, oops, sorry. Here we go. So from once price came up here, and then you see this quick change of character, right? You could have, because price is overall bearish. So, and then price pulled back to the 88, almost 100, but the 88. And then sold down to your 618, which is the key level. So that could have been, or So this could have been your entry from, once this came back. So from here, from this zone, you know, I like to move it above the zone and then take it to the next zone. So that would have been 147 pips. Well, 150 pips. So now that this is your zone, price would need to break up here before buying, or it would need to come here, start breaking structure to buy up to this zone. So it would have to be from zone to zone, just to make sure, because the same thing happened with was it gold? I think it was. Because everybody was thinking gold was going to buy up some more.
Yeah. Mm-hmm.
But this is the swing high. That was the break of structure. And then this is your swing low. Okay. So in between, it's ranging, right? But if you're going to trade it because price has broken a major level of structure, so now once I see a major break, you can fib it. Price came back. It didn't even get to the 23.6, but price came back and started breaking structure. So now you have more structure. So you had a push down, a push up, the push down, a push up, so a push down. So all these breaks of structure. You just look at your last swing high and low. And because it's bearish, when price comes back to your zone, you look for your entry. So this came back to the zone, didn't break any of these highs, and gave you an order block. So you could have entered off of this order block. So now that price has broken through here, and because price is going down to this negative 27. And if I scoop, we're talking a key level there. And then there's another key level here. So, and it is probably going to go down to the 618. But we know we're pretty much guaranteed a negative 27, right?
Right.
So with EN, same thing. We had the last swing. This was the high, this was the low. I mean, it broke out, but then it broke back in and broke a little minor level of structure here. So if you wanted to fib that, price came back to the 88. Oh, it came back past 100. I would have been a little skeptical about that one. But you always want to wait to see what price is going to do anyway. So once it came here, came back, started ranging on that key level, it gave you an order block, a bullish order block here. That you could have entered off of. Your low would have had to been down here. If you didn't get this one, which was at is that 5:30? So that was during market close, I think. Then you could have gotten in on this one. So once this order block pushed up, you could have marked up your order block, put it your low. It was 24.5, so I just would have rounded it up to 25 pips. And then you could have just taken it back up to this zone. once price gets here, you can just wait and see what happens. And of course, when price gets in this zone, if it gives you a bullish order block, especially if it breaks above, then you can definitely take it to your golden zone or the next key level. That's 152 pips. So I would say, yay, yay, yay. Anything else you want to look at?
I bought UJ up this morning.
UJ. SDJPY. Okay. Let's go to the weekly.
Good evening.
Hi. Who is that? Kyra? Is it Kyra?
Yes, ma'am. How you
Okay.
doing?
I'm doing great. How are you?
I'm all right. I'm in the car, so I can't pull up my
Yeah.
chart.
Happy Friday, everybody. Happy Friday.
I
Okay.
know it's a sale, but I got in on that pullback this morning.
So I would say this. You still in it?
Oh no, I got out. No,
Oh, okay.
I
So
just traded news and then I got out.
okay. Because I was gonna say we got a key level right here.
Yeah.
Right. And then the next one would be, there's one right here, and which it did tap, boom, right there. And then the one above, I would just, this is the one that pops to my, that's clearer for me.
Yeah.
That would be the next zone. So, if we go to the 4 hour, so price tap this key level. So price is here now at this key level. So price is either going to, even with this bullish order block, price could still come. It would have to create some structure to break structure. And right now, this is the structure. This is the structure. So price would have to break this, close below here, pull back, and then sell down to this zone. Or price is going to give you maybe a 1 hour or 30-minute order block to then buy up to, because we got to remember, even though we're going from zone to zone, price might just stop at this minor key level and then come push back down. Or we can even look to the left and you have a zone here that price might even come all the way up here. Price might come to here and then start selling back down.
Yep. I agree.
So, so yeah, I would, if this goes up, let's see how many pips from here to here. Oh, that's 143 pips. Oh, wait a minute. I missed the, from here to here. That's still 100 pips, which is nice. 100 pips can do it too. Can do the trick too. So, yeah. But when it starts to come down, it's either going to come here and break above, right? Or come back here and keep selling down to here, which is a nice little trade. And if we fib this major smooth up, So price is probably going to come back to the 78. Possibly. Let's see what's down there. You see it right there. There's some imbalance right there on the 4 hour. So price is probably coming back down there. So with that being said, this will be a 4 hour key level right here. Support, resistance, support. That's going to be a nice little trade. Do you swing trade or you
No.
day trade? Day trade?
Yes, just day trade.
Okay. Well, once it comes from here to here and you're in the blue, you're probably going to stay in and be like, okay, or no.
See,
No,
I
no.
normally just trade that whole move down, but I haven't got comfortable with holding swing trades yet.
Girl, I feel you. I'm the same way. I'm the same way. So yes, so and you're comfortable with entries, right? I know I said I was going to talk about it, but
I am. My entries are usually based on price.
you do the quarter levels?
Yes.
Okay. Gotcha. All right. Anything else you want to look at?
That is all. Thank you, Kim.
That is it. You're welcome. All right. Anybody else who's in a trade, who won a trade, who lost a trade? We're just gonna talk about the key levels and the entries and for today. Anybody?
I was in the trade, but I I got out. I got scared myself out of the trade. I'm trying to think which one it was. Hold on.
Now don't be driving and
No, I'm parked outside my daughter's school picking up from wrestling.
okay, good.
Yeah, let me get. And they went way past my TP. All right, let me see.
Ooh. Don't you hate it? I hate it. I do.
I really do. Where was I at? Oh, I was in GJ, and my TP was 184,635, and I think I got out. Let me see. I got out. Where was I at?
Your entry was 184, or your TP?
No, my TP was 184. I got in at. Listen, I knew I got it all at the wrong time, but I was in process.
That's all that matters.
One of my entries was 185,871.
Ooh.
I had another entry at. Well, listen, I broke all the rules in these trades. I know I did. I got in at 185,682 and 185,433. Well, hold on, let me see where I got out at. Darn it. I was looking at the chart, and it got to like a 4 hour level, and it was like it got to the 4 hour major level, and it stayed there. It like made a double bottom. It went up a tiny bit, and then I think it slammed down. See, I'm on my phone.
That's okay. That's okay. We get ready to do. We get ready to just go through it. Go through the process. We're gonna go through the process. So we're going to the daily, and let's see. There's a key level there. Oh, you got in. You got in at a good level. Well, for that one. Actually, you were at a good level for most of the trades. Let's see.
I did not wait for a pullback. Let me just jump in.
So this broke. Let's go back to there. Okay. And I'm just marking up where you got in. Oh, well, we might as well mark below price now. So here's a key level here. And then here's a key level here. Okay. And then we're just going to go to the 4 hour and just see.
Where did I get out?
This was a great entry, right?
I think I got out. Let me see what level is that. You see where that second leg is on that on the first trade that you got marked
On the
up?
first,
I got out
right
right
here?
here at the end of that wick. See that last wick that came down?
Right here?
Yes.
Oh, oh. So let me mark. I'm gonna mark that up because that's a 4 hour. That is a 4 hour key level, right? It reacted. It resists. I mean, support. So that was a key level. But if you are on the chart, hold on. Let me go back to the. I want to mark that up so I can know what it is. 4 hour key level. All the rest of them are daily. So if we're on the 1 hour, so if you got in here, this probably wasn't the best entry. And I say that because price is so low, like you want to get in when price is bullish, right? Price is bearish here. So from here to here would have been the best move. From this level to this level would have been the best move, which I think is where you say you got out for this one.
Yeah.
And that was like 97 pips. That was good. But then it turned around. So if we're looking at, when you go to the chart, this was the last swing. So from this zone up to here was the last swing, right? If you wanted to trade that, you would have said, okay, this was the last swing. Price pulled back completely to the 100%. So my guess would have been, okay, price may be trying to sell at this point. But once price broke this level here and then pulled back, it filled this imbalance. It didn't come all the way to the key level, but depending on, I'm just throwing it on there. But once it gave, pretty much tapped and then gave a bullish order block, this would have been your zone. So it broke this level of structure above this key level. So you could have, once it gave this order block, you could have, because now it's buying once it breaks the structure. So you could have put that below your zone and took it to the next zone, which that was 73 pips. So once you're at the zone, we're on the 1 hour. And I know people get scared when they see like the bearish order blocks or the bearish candles. But you're at the zone. It did not give a bearish order block anywhere on this pullback. So you could have stayed in. You wouldn't have been in drawdown, but your profit would have been pulling back just a little bit. And then once it gave you this bullish order block at the zone, you could have put in a second entry. You could have put in a second entry. You mark up that zone, put in a second entry, and where's our next zone? I don't think I marked that up. Let me go to the 4 hour. So on the 4 hour, the next key level is pretty much right here. This was support resistance. That wasn't it, but yeah. So that could have been you could have taken it up to that zone, which would have been 200 pips. And once I get my swings, I just mark up my swings, right? So once price comes back to that, you see it pull back to, so this was the swing, and then this was the second point. Once you have 2 points, you can pretty much draw your trend line, because I don't use, unless you use moving averages. And this pulled back, gave me a bullish order block. It pulled back, started breaking these minor levels of structure. And although it broke the trend line, it just pulled back to this zone and gave more momentum in this zone. So you could have stayed, as long as it didn't break through here, you could have stayed in this trade up until this zone. That's where I would have stayed. I would have got, but I get out. Huh?
You're on the zone covering that whole width of that bullish order block, right?
Yes. So I normally cover, when I see the order block, I cover from body to the wick.
Okay.
And then if you want, you can mark up, like these candles barely have any wicks on them. So you could mark up this zone here. And then once that, no, I'm not teaching you that yet. Okay, I won't teach you that yet. Never mind. Forget what I just said. Because I want to teach y'all how to stack. Like once you get in the trade, once you get it and it starts moving in your direction, how to stack the trade. But we're gonna get to that. So now that you can either extend your trend line, or I personally just, once price starts breaking structure, I then just move my trend line to the next zone. So once price comes back and it starts giving me a little something in that area, like this little order block right here, I'm going in. So once it gave that order block, you can just mark up. And this is on the 1 hour. So I like it to look on the 1 hour. That's like a 16, 15 pip stop loss. I'd always give 20. Okay. And then you can, I'm still teaching you how to stack, because this is what I'm so used to doing it like this. Yeah, to the zone. So this could have been the first entry. Here we go stacking. And here go the second entry, and here go the third entry. So so we're talking how many pips was this? 212 pips, 151 pips, 73 pips. So
as long as you like in the middle of the zone, as long as it respects your trend line and gives you a bullish order block, you'll get in.
I like to wait for it to come back to the trend line. Okay. And respect my zone. And then I take all my TPs to the same, because you take all my TPs to the same, or have them all have the same TP.
Right.
Because once you get there, you don't know what's going to happen, just like this. So
Oh.
this broke structure. You okay?
Oh yeah, my daughter just walked up.
Oh,
baby
oh.
girl.
I was like, I was gonna say, who is?
I got mine. I'm gonna put on mute. Sorry.
Nuh-uh, you're fine.
Okay.
So once price so it broke my trend line, it's breaking my key level. And as you can see, it came back to my trend line, and it came back to, you see, we had this zone here. And it came back from what was support, then became resistance. And then it sold down.
Right there for a sale.
So
you're getting in there, right? You're gonna get in right in there for a sale. Okay.
Or you could have waited for it. So you could have gotten in here. Or you could have waited for price to break. See, it started breaking this order block. You see this bullish order block. It broke here, right? It broke past your key level. You could have gotten in at your key level. Like I like to get in at the zones. So, you can do 20 pips again. It wouldn't have gotten you even at 15, but I just like to give 20 pips, which is above this candle here. And then you could have taken it down to your next zone.
Okay. Because I was waiting until it got like on the zone. I wasn't entering in the middle of the zone, which I probably did a couple times.
Yeah, don't play in the middle. And I mean, we're gonna get there. We're gonna get you there though. We're gonna get you there. But I would say don't play in the middle. Try your best to get your entry, at least your first entry in at the zone. And then if you want to, dibble dabble in, then you can mark up the last, this was a level of support, right? So this would have been a key level. You can mark it up from here to the wicks. And then price came in and gave you a bearish order block. It gave you a bullish order block. But price would have to break above to go to the upside, right? It's in your zone. It gave you a bullish order block in the zone, and then it gave you a bearish order block and broke out the zone. So once it breaks out the zone, this would have been your next entry. Take it to same TP. And then it would have almost hit your TP, pulled all the way back. I know most of us would have been crying like, oh, I'm going to lose my trade. But
I ain't gonna lie, I got out at 15-minute break.
Now, and because we know like order blocks, we know that like there was an order block here, right? Let me move this out the way. There was an order block here. So once you got in here and got in based off of this order block, and then got another order block, price is breaking the structure. So you can mark up your next order block. Now I just would have put it above the zone. The stop loss is once you start stacking, your stop loss is always going to be a little bit more.
Yeah.
And which means the risk to reward won't be as much. So this was almost 3%. This was 6%. This one was 6%, and this one was almost 5%. So, and that's all you need is 3 entry, 3 trades. Like if you start stacking properly, you just need 3, and just let it go to your zone, because we don't know what might happen. Like once it got to the zone, we don't know it, because it's breaking structure. We don't know if it's going back up or not, right?
Right.
So once you get out at your key level, then you just wait for price to do what it's going to do. It came back here. It gave a bullish order block. And then it came and, well, by this time, I would have had my trend line drawn. So let me just take these out real quick. So I don't have a ton of, oops. So, let's see. So by this time, I would have had my trend line drawn. So from here to here to here. So once price broke out, but you're waiting, you've already gotten your profit for all this, right? Once price broke my trend line, I either need to wait for it to come back up here, or I need to wait for it to come back down here. So once that came back to this zone, broke through my zone, pulled back, and then gave a chop. So the price broke there. You could have gotten in at the chop. And normally I would say get in at the institutional candle, which is the last up candle before the down move. But you can get in, let me just, because I'm normally drawing my zone from the body to the wick. And then I trade from the bottom of the zone. And then I put my TP up here. So, I mean, my stop loss up here. So from here to here. And that would have been 84 pips. That would have been a good day as well. Or you could have just waited. Once price broke structure, it pulled back. I'm not even gonna lie. I'm gonna take my profit. I'm taking my profit. I don't care. I'm not holding on. But once price pulled back, pull to my zone, nothing right here would have told me to get into that zone. But then once price came here and then broke structure, there's a little order block right there. You could have marked up your order block. And then price tapped in. Or there's an order block at right here in this zone, and it pulled back into it. So you could have got in for this one, you could have got in right here. For this one, you could have got in right here. And then for this one, you could have gotten in right here. That could have been 3 entries right there. For this one was this order block. For this one, there was this order block. And then for this one, there was one more order block. And you just could have taken this down. That's 100 pips. That's another 100 pips. And that's 92 pips. 292 pips. And of course, on the 1 hour, this would have happened. And you could have stayed in, right? This could have happened. You could have stayed in. Once I saw a green candle, I would have thought twice, I would have possibly gotten out. But once you get every hour, you're getting a red candle, red. So if you just stayed in that, when I got this candle here, I would have held on to this one. This one, actually, I would have held on all of this. This one, this one. Once I got this one, I would have gotten out. So if you had held it, that would have been 480 pips. This one would have been 470 pips. And then this one would have been 461 pips. That's how you do it. That's how you do it. Yeah, once this started coming back up, I would have got out. Oh, shoot. No, you could have taken it to the zone. I forgot. I didn't even see that wick. If you had taken it to the zone, you would have been good. But yeah. So did she drop off? I think she did. Oh, no, she didn't. She on there. So yes. So that's how you get stack your entries, look at your trades, and then of course I'm moving my trend line once that happens. Because I would have thought price was going to come back here, but it didn't. So that's how you can hold on to your trades.
I'm gonna back test this tonight because I was just waiting till the price got into the zone to do anything.
Yep. So now with where price is now, it's in the middle, right? And although it's creating some kind of key levels or structure, because I got to squint, I wouldn't even look at this, but this is probably pulling back up to here, maybe up some more. But yeah, I would definitely wait for it to come back to a key level. Mm-hmm. So, yep. Anything else you want to see or have questions about? Anything, anybody?
Oh man, I wish I had my computer. I don't have my computer. I've been messed up the last couple of days.
You
Not
say you
being
do what?
I've been messed up the last couple of days. Haven't been able to be on my computer.
Oh, okay.
Yeah, my neck was all messed up, so I had to take a break. But I did get in GJ.
Good.
I over leveraged though. I over leveraged.
Ooh, so you made some money? So you made some money?
Huh?
So did you make some money? Even though you got out early? Over leverage?
I think I made like $1,300. Child, I got out way before I should have got out.
You could have made a whole grip.
I'm about to go home and get my my mouse and all that stuff because
okay.
I was all messed up. Had to put me on painkillers.
You had to put you on what?
I had to put me on painkillers because I fell asleep with my head up on my headboard.
Oh,
on
no.
the chart.
Oh,
my neck got locked all up.
Oh my
For the
God.
coldest. So I said, "Oh Lord, I got to stop this now."
You gotta get you some rest. I remember those.
I'll be back.
I remember those
tomorrow.
days.
I'll be back testing this tomorrow.
I remember those days. All right. Anybody want to look at anything else?
Kim.
Uh-huh.
go over gold, like from daily, not till now? I mean,
Yes,
till now.
yes, ma'am. Okay. So daily, we're going to mark up the daily key levels. So I'm going to mark up this one first. Because this is the high, like this is now the highest point, highest price ever. So the next, okay, price is right here. So I'm just going to go to zone here. So this is the zone below. This is the zone above. And then I'm going to go to the 4 hour. And currently price is pretty much at a key 4 hour key level. Let me just mark this 4 hour. And then let's see if I can find one above. Right here. Okay. So let me move my lines, my zones, I mean. Okay, so we're at a key level right now. And this should go here. From here to here. Okay, so we're at a key level now. And let's go to the 1 hour. So on the 1 hour, as you can see, it's doing a little pullback. But we have an order block here, right? So we have this imbalance in between here. So we have this order block. So price may come tap into this order block. It can tap into the wicks of the order block, or so I would just mark up that zone there from the body. Now this is on the 1 hour, so it may come here and pull back down. So once it gets back to this zone, you want to assess whether it's going to give you a 1 hour order block. And if so, you want to see it kind of break some kind of levels of structure. Maybe it'll pull back into this imbalance right here. Maybe it'll pull back into this imbalance right here. And then possibly buy back up. Or if this zone, what's that, 76 pips, I think. So let me look at the daily. So the daily, because of this wick, look like it is breaking, it's likely starting to break structure to the top side. Let me see what the weekly is given. Okay, so price broke through, right? And then pulled back to and retested this area. So that's what this is right now. This is a retest of this break of structure here. Price pushed up, pulled back, and then broke structure. So price pulled back and it's retesting the area. So you may get a push back up to this zone, which is is that 344 pips? Yeah, that's 344 pips. I forgot I'm on go. Yeah, 344 pips. So you can possibly get the pullback up to here. Or now, if it comes back to here, it's coming back because I've fibbed this high because there was the break of structure here to this low. So let's go back to the weekly. So if price pulls back to this 23 and starts to break structure to the downside, price is going to, if it pulls back to the 23, I don't think it'll come back to the 38. My guess is it'll pull back here and then continue to the downside. So the next zone is actually the -27. The zone after that is actually the -618. So whatever price pulls back to, know that you can take it to the -27. So even if it pulls back here, you can take it to the -27, which is right here. So that's about 755 pips. From here is about 620 pips. And if it just pulls, oh no. From here is like 620 pips. So I would be looking for some level of structure, and we might find it on the, I didn't see it on the 1 hour, but it may be on the 30-minute, maybe. Not yet. So this is your high. This is your swing high. Oops. Let me just mark it up. This is your swing high, and this is your swing low. So price could come here because this is a order block on the one, that was our 1 hour order block, right? So price can come up in here and start selling back down. So I would wait for, even if it broke this, it's got to, remember, it's got to pull back. So you can, so you got a bullish order block on your key level. So at least, I would say, you can at least wait for a little pullback to trade it up to here, which is 124 pips. But if it doesn't break that swing high, then it's probably going to just start selling back down.
Okay, Kim.
Uh-huh.
So where the swing low is, there, that's
Right
the
here.
zone. That zone right there. Since that zone is not, I guess maybe I do my key levels and zones kind of the same. But my question is, since that is the zone, that's where the swing low is, do you wait to get in at the zone, or is it okay to get in at the key level? Since
So once price starts breaking back down here, you'll know it, you can get in because we're bearish, right? So you are really looking for bearish moves. You can wait for price to break through the zone. You can wait for price to get you can wait for price to break through here, but because I have a key level here, and I don't know what time frame I put this on. It may have been the 1 hour. Let me see if it was the 4 hour. It could be the 4 hour. Let's see.
some of my 4 hour and 1 hour is about the same.
Yeah. So price broke, pull back, came in. So that's a little level right here. And I'm just gonna mark it up with my, okay. So with that being said, let's see how many pips from zone to zone. That's 100 pips. So that would be a nice little zone. So if, let's go back down to the 30-minute, and I'm just going to remove this, right? Because if price doesn't break this high and starts breaking structure to the downside, start breaking, well, you want to see, make it so you can see, okay. You want to see price break. You want to see price come here. You want to see price break this order, violate this order block. Oops. So once price comes and breaks and violates that order block, it can pull back to the zone and then keep going to the next zone. Or it can pull back to this break, this violated order block.
And keep going up.
And keep going. No, it can keep going down. Like once it gets broken, I know it's a sell. But what I'm saying is price may not come back to here, but it's so close. I'm almost confident that it will come back to there.
But it wouldn't have
Which
to
is like,
violate the order block, right?
uh,
It doesn't have to violate the order block. It could go to that.
Oh yeah, right. It can come here
Okay.
and it can pull back into this and give you a bullish order block.
Yeah. And go back up to that
So
top
that,
zone and come back down.
and then start going back up to, yes.
If it doesn't break the next zone.
If it doesn't
break the next zone, if that's what, if it goes to that order block and reacts and rejects it and goes back up, it can go back up to the next zone.
Right here.
Yes. And then we'll see if it breaks it or not.
Yeah.
And if it doesn't, we look to the negative 27.
So you're saying if it does not break here,
it will come back down, right?
yes. But you'll
I
have
know
to
you
see.
had a fib or something on there earlier.
Yeah, so this move, right? So this is a minor, just a minor level move, right?
Oh,
so
okay.
Price could push back up to here, to the 78, the 88. It might even come back in the zone and give you bearish, like start breaking structure. And then you wait for that pullback to sell back down. But I will say, let me rephrase that. Don't play it in the middle. Don't play it in the middle. Now, there are some levels of structure, but here's one right here. Here's one right here. Let me go to the 1 hour and see if I can see it. Yeah, let me see if I can see it on the 4 hour, because that's what I like to mark up. So, okay, here we go. Here's a level, a key level. So even with the wicks, the wick, the wick. So this is a 4 hour key level right here. Is that the one I wanted to do? Yeah. So if I go back down to the hour, so price could come here, like we said, into this order block, and then starts pushing back to the downside. But if price comes to this key level and gives you a bullish momentum, like I just want you to always know where you are on the chart, right? Because I don't want you to say, okay, let me come here and go all the way up here. It's got to be some level. You still have to remember market structure. And right now, market structure is price broke. What is that? Always do that. Price broke down, pushed back, and then broke structure. So now you're in between here and here. So I'll wait for price to get to one of these levels and then react from there. And like I said, this could pull back next week and come back up here. And even if I'm looking at this from a 1 hour standpoint, here's a key level here. So price can come back to mitigate based on price action, this wick, right? Price can come back to this wick. Or there's a violated order block here, and price can come, maybe price want to just come fill 50% of this imbalance right here, which is where this zone is right here. So if you're, so you know how I'm always talking about don't counter trend trade, right?
Yeah.
But if you're going to counter trend trade, you have to know where you are in the chart. You have to know that price may come here and it may just come to the, where are we on the fib? We're at the 50% right now. So next week, you can get a 1 hour bearish order block to break, to push back into here. But you want to make sure price is not only breaking into this key level, you want to make sure it breaks a low. Like it'll break this low, which is all good, but that could just be a pullback. It's got to break this low, and then you wait for the pullback and then sell it down. Like the key levels are magical. I'm trying to tell you. If you just trade the key level, it's magical. And like I said, at some point soon, in one of these weeks, we'll go over stacking again. So are you in this trade? Are you in this gold trade?
I was. And
For sale?
I got out of it. But because I had to go to work, so I just set a TP. But I did counter trend trade. That when it hit the bottom, I got in for the buy. Because I waited too late to get in for the sell because I was scared of the news. I was thinking it was going to go up, take liquidity, top side liquidity, then come down. So I didn't want to get in.
Mm-hmm.
And then when it started moving, I was just late getting in. I just didn't worry about it.
So price may come to this 618, which is this key level, and then start selling back down. It may not even come all the way back up here.
Yeah. I think I took profit at that 4 hour, the bottom one.
Right here.
Up, yeah, around there. Because I just left, yeah.
But if you had watched it, you would have had 1 hour, and then you would have had the last hour, and you could have gotten out there. You could have closed your trade before market close, and you would have been in profit. You got it. You will get this, Miss Tasha. Tasha. Any other questions? Anybody?
Did you go over UJ? I'm sorry, I just got on.
That's okay. Who's the Anna? Hi, Anna.
Hello.
Hi there. So UJ, we said we just marked the key levels up here. So we had a zone here. We have a zone here. Price tapped into that zone. So now we're at a level. You're at a key level. So you may want to, like I said, because this gave a bullish order block, it doesn't mean it's going to keep going up. It would, if price broke, and I'm gonna just go with this high here. But if price broke these highs, then you can get in on a pullback to at least buy it up here, which because price is bearish, because we see price is bearish. So once price got here, you can either watch for it to see what happens. If it starts breaking structure, then you can take your profit. And you can sell it back down. Again, it's in between the zone. I'm sure if we, here's a 4 hour zone here. So we have a 4-hour key level here. And then if price comes here and starts to break down, then we'll have a 4-hour key level here.
Okay.
That's if price comes back up this far. So you may have a 4-hour key level here, but it is a level of support right here. So if it comes back here and starts resisting, then you can get in to sell down.
Okay.
Here again, 7 pips, so 147 pips, you probably get 150. And then if it gives you another bearish momentum, then you can take it to this next zone, which is 456 pips.
Okay.
Yep.
Yes, thank you very much.
You're welcome. All right, any other questions? So I would say that price is probably coming down at least to the 78, if not more. Like we said, oh, I forgot to mention this part, Anna. Price is probably coming down to the 78 because we fibbed this whole move up, right? This was a whole swing right here. And at the 78, there is imbalance. So price is probably coming to fill this imbalance to possibly either start buying back up, because price never broke this high. Started breaking structure to the downside. So price can tap into here, pull back up, and then possibly sell back down. But the pullback could be where we say the 78. The 78 was here. So the pullback could possibly be here. And why I say here is because there's imbalance here, unless this gets filled. 2 is looking like a little mini head and shoulders. Or you can just, once it gets here, you can fib the whole move down to see where this 78 or the 88 might be. But I think it may continue keep going up.
Okay. All right, thank you.
You're welcome. Oh yeah, so this is the highest it's ever been. So oh, and these are equal highs. Y'all see the equal highs? So this could go back up, grab liquidity, and then fall down.
Okay.
Down. Yep. And I'm going to read, that's the last, this is the last push swing up, but the bigger move is but it didn't break that high, so I can't feel that. Don't look at that. So it's going one way or the other. One way or the other, it's going. Yeah. Because these are equal highs, I don't know which one to fib up. But we had a break of structure here, a pullback. So I would say if we're going to keep selling, you can definitely target these lows.
Okay, that's a long ways.
But my immediate day trading entries, like here's a level here. Oh, that's a weekly level. So I think this is definitely going to pull back at least to this zone.
Okay.
because that's the only thing that hasn't been mitigated. Everything else you see, there's no gap or order block that hasn't been tapped into.
Okay.
So that's you, Jay. Are you a day trader or swing trader?
I like to swing trade because I like to hold. I don't have a lot of time to be on the charts. I don't like to be on the charts a lot because
Yeah.
I feel like it makes me overthink my analysis.
Yeah.
See, like I had my analysis for UJ and it did exactly the way I had marked it up. I got out really early,
Okay.
but I did exactly what I had marked up.
Well, that's good. So it's still selling. So definitely look for sales. And if you're going to counter trend trade, make them short and sweet.
Okay.
Mm-hmm. Anything else?
No, that's it for me. I'm gonna go back and watch the video, the recording. So that's
I
it.
recorded this one, so I'll definitely have Ty post it.
Okay.
Anybody else
Okay.
want anything else? Thank you. Anna, sorry. Anybody else
Yes,
want to
ma'am.
look at anything else?
I'll have questions next week.
You say you'll have what?
I have a bunch of questions next week
Okay,
once I
we'll
my
be ready.
computer in front.
We'll be ready for you. All right. Well, if there are no more questions, then that is the end of the session. Is there anything y'all want to see in these sessions? Anything you feel like you need additional help on?
No, maybe on the next session we can just back test this strategy.
Okay. Yep,
For me,
we can do that.
Close.
We can do that.
And sometimes I get in too early or too late. So kind of like what you're seeing on the 15-minute.
Huh? Who's going to the 15-minute? Who said it? Who said it?
Uh-oh.
I'm just messing with you.
Oh, no, something wrong with my speaker.
Uh-oh, she dropped off. All right, well, if there's nothing else, thank you, ladies and gentlemen.
Thanks, Kim.
You're welcome.
Thank you.
Welcome.
thanks again.
You're welcome.
Thank you.
You're welcome.